So we're now experiencing another historical, once-in-a-millennial lifetime event because the world's most powerful central bank, the Federal Reserve, has started to lose money, which started sometime in 2022. This has never happened in our lifetime. In fact, the central bank losing money is so rare that the last time this happened was in 1916. So far, the Federal Reserve is on track to lose $100 billion in 2023. And economists predict that by next year, it's going to lose as much as $100 to $150 billion. And that leaves a lot of questions like, how does the bank that can almost literally print money lose money? Did they start a gambling YouTube channel? Did they buy Coinbase IPO? Or did they get musked and go all in on Dogecoin? Now the answer is because of interest rates. Since March 2022, Papa Jerome Powell, who's the guy in charge of the Federal Reserve, has been fighting inflation. And the way he's been doing that is by increasing interest rates. And that's why something called the federal funds rate is now up to 5.3%, which is historically extremely high. Now this has done a couple things. First, it's made it a lot more expensive for us to borrow money, but it's also increased the interest cost on America's debt.
The national debt increased by nearly 90% since the beginning of the pandemic. But many economists and politicians warn that the ever-expanding national debt can be harmful to the economy.
And unfortunately, we're using it for rainy days and sunny days right now.
Now, the national debt as it stands today is roughly $33 trillion. That is the highest it's ever been, and that number is so unfathomably big that there's a debate in the field of economics on what we should do about it. Some economists argue that if we don't pay it down, it's unsustainable and that our children will be paying for it with their future. But other economists argue that ultimately all of that money is just the US owing itself. And it's really not that important because it's all just accounting trickery.
The thing that we refer to as the national debt is really nothing more than an accounting record. It's keeping track of how many dollars the government has added to the broader economy, minus how many dollars it has subtracted away from us, mostly through taxation.
Is there a reason you should want debt to be zero, precisely zero? No, there's no reason for that.
Relatable. I think we all want our debt to be treated that way. Listen, Mr. Chase, I know rent is due, but is there a reason you want that number to read zero? No, it's all accounting trickery. Just hit backspace on your computer a couple times and make it go away. So in today's video, I want to show you all the nitty-gritty details of how the Federal Reserve started to lose money and how it got to be this bad, and who will potentially end up paying for it. That said, let's get into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the magic of accounting. Please do me a favor and add some digits to that like button, and let's talk about how the Federal Reserve can actually lose money.
At the end of July 2023, when the debt was about $300 billion less, roughly $7 trillion of that was intragovernmental debt holdings, meaning the government owes itself that money. The majority of the debt, about $25.7 trillion, was held by the public.
Now, you might have heard of this statistic where if every single person in the US started to contribute to paying down the national debt, they would owe $98,000. And if we include only taxpayers or the working class, each person would owe over $250,000. And a lot of times that's used as a talking point to get people angry or to get them to vote a certain way, but you don't actually owe that money and it's not true. Here's how it actually works. Out of that $33 trillion that makes up the national debt, it's divided into two separate categories: intragovernmental debt and something called debt held by the public. Now, debt held by the public, which is the majority of that money, even though it's called debt held by public, is not actual money that is owed by the public. It's actually the other way around. It's the government owing that to its people, to insurance companies, mutual funds, pension funds, even countries in some cases. And that number right now is roughly $26 trillion. Now, hold on a minute. How does the government owe so much money to the people, right?
When the government borrows money, it does that by issuing a bond, which is a piece of paper that either says, I owe you this much money in the future, or I'm going to pay you interest at these particular time horizons and then pay you back the full amount at some other time in the future.
So if you ever bought a treasury bond, technically the government owes you money. I know that of that $26 trillion, the government owes me $10,000 of that money. And that's because I bought a treasury bond directly on their website. I bought $10,000 worth. so I lent them my money, and in exchange, they pay me interest. That's an example of debt held by the public. But here's where it gets really interesting. The Federal Reserve, which is responsible for controlling the supply of money and setting interest rates, and also lends money to the government by buying treasury bonds, its debt is considered debt held by the public, not intragovernmental debt. Even though the Federal Reserve is part of the government, it's also a private institution, and it exists in this weird gray area where its debt is counted as debt held by the public, which means of that $26 trillion that the government owes, it partially owes to the Federal Reserve. And here's why the Federal Reserve is now losing money. When the Federal Reserve prints money, and you see all these funny memes of Jerome Powell running the printer, what the Fed is actually doing is not literally printing money. Instead, they're buying mortgage-backed securities and treasury bonds. They are adding to their balance sheet, aka their portfolio, kind of like my stock portfolio right here. But I buy stocks and they buy those two things. That is partially how they control inflation and how they set interest rates. It gets pretty complicated, but just remember, anytime the Fed is adding to their portfolio or their balance sheet by buying those things, it makes the economy grow faster, and that's called quantitative easing. And this is exactly what the Federal Reserve did a lot of from early 2020 to March 2022. That's when all the risk assets like Bitcoin, tech stocks, real estate, and all of that exploded in price. Everyone was making money buying the craziest things. Everyone looked like a genius because the Fed was essentially insuring the market from failing. And as soon as investors realized that, they piled on all their money and we got asset inflation. But now they had to reverse. And the way they do that is by selling off the assets in their portfolio, and that's called quantitative tightening. That slows the growth of the economy like they're doing now. And you can see that the Fed's balance sheet or portfolio is now going down. And this is directly from their own website. But here's why the Fed is now losing money. And credit to Peter Schiff for noticing this originally, because in Q2 of 2023, the Fed had about $5.5 trillion of treasury bonds earning 2%, and $2.6 trillion in mortgage-backed securities earning about 2.2%. But the debt that the Federal Reserve had was costing them 5%. In other words, the money they were generating was making them 2%, but their debt was costing them 5%. And because they were adding to their portfolio when interest rates were very low, and now that they're selling off their assets, they're not adding to their portfolio at these newer higher rates, there's an imbalance. So what this led to was the Fed making $88.4 billion in net income in the first half of this year and paying out $141.8 billion in interest expenses. That's a loss of about $53 billion in the first half of the year. So at this pace, they're gonna double their losses by the end of the year. Now, if you're still here, and I didn't actually put you to sleep because this stuff is so complicated, you're doing amazing, and thank you for keeping up, but why does any of this matter, right? It matters because of this chart right here. That's the Federal Reserve's remittance of money to the Treasury. You see, when the Federal Reserve ends up with more money than it spends at the end of the year, like it should, like it has every year for at least a century now, it sends that extra money to the US Treasury. And it's the Treasury that's responsible for paying down the national debt.
So public debt has always been used for emergencies. It's easier to finance by borrowing than to burden the current generation with taxes. We saw debt rise dramatically in the late 2000s after the global financial crisis, and we saw debt rise again during COVID. The debt in some ways is a contingency plan that we use to smooth out otherwise what would be big shocks to our economy.
So here's why this actually matters to us though. Whenever the Federal Reserve loses money, it's not able to send or remit money to the US Treasury. When the US Treasury gets less money, it has less funding for programs like retirement and Social Security, and less money to build roads and bridges, and less money to invest in our future.
The public debt is one thing we're going to pass to the next generation. So is the quality of the environment, so is the infrastructure and roads and broadband and etc. So we need to balance both, the costs and benefits that we send to future generations.
Now, if the US has less money, we have two choices. Number one, we can borrow more money, which is exactly what we're doing, which only makes the problem worse. Or number two, we can raise taxes on everybody, which nobody wants to do.
The problem is that we keep borrowing and borrowing and borrowing day in and day out. So we're not borrowing for emergencies. We're not borrowing only for long-term investments. We're borrowing for immediate consumption. And any borrower, whether that's a person or a business or a government, if you borrow for immediate consumption with no long-term benefit, you're actually deteriorating your financial or fiscal future over the long run.
And this is where people and economists disagree over what to do with the national debt. Should we pay it down or just ignore it?
I think the biggest point of confusion or piece of misinformation about this thing we call the national debt is that it is somehow a burden to the rest of us, right? You'll hear people talk about the national debt burdening future generations. It ends up scaring people because you're thinking that the federal government's budget works like a household budget, and that if the government is borrowing and taking on debt, that somehow it's going to find itself in a situation somewhere down the road where it can no longer afford to pay the bills. And that's just simply not true. The government's budget doesn't work anything like a household budget.
So that's the argument in favor of not worrying about the national debt because it's nothing like a household budget. But there is an even better piece of evidence to support it, which is Japan, which shouldn't technically exist in its current state. Because Japan has the highest debt to GDP ratio in the world. It owes a lot of money by comparison to how slowly their economy is growing. So their government dropped rates to close to zero. In fact, its rates have been so low that it's been negative, but that also means they should have high inflation. But somehow, they don't.
The Japanese government has been running fiscal deficits basically for the last 3 decades. Has it been inflationary? No. Has it driven interest rates sky high and crowded out private investment? No. Has Japan faced any kind of a fiscal solvency crisis as a result? No. When you look at what mainstream economics tells us is supposed to happen, if governments don't balance their budgets, if they run persistent fiscal deficits, if the debt continues to rise, interest rates are supposed to go up, it's supposed to trigger inflationary problems, solvency risk, and all the rest of it just didn't happen.
So maybe the national debt isn't as bad as it seems. Whatever the case might be, economists still think there's some missing link that we don't understand about the difference between Japan and the US, why they have such different outcomes despite everything we know about economics. They do have some guesses, like Japan's aging population. By comparison, the US has a much younger working force. There's also the policy on immigration. The US is much more open as compared to Japan, which could lead to more innovation, more competition. There's also the difference in fiscal policy in terms of how the government thinks about treating money and all those policies. There's also the difference in work culture and the stock markets, and the size of just how important the US is on a global level. And of course, the US has the dollar, which is the world's reserve currency. So those are some of the reasons that probably contribute to all of it, but we don't know for sure. At least I don't, so I don't know why you're watching my YouTube channel. But either way, I think a really reasonable approach to think about the national debt is that we shouldn't just outright print money to solve all of our problems, but we probably shouldn't hold up the entire government over something like the debt ceiling. Now, this week is extremely important for you to pay attention to because this Wednesday, the Fed is going to get together and decide what they want to do with interest rates. And as of right now, the CME Fed Watch tool, which has done a really good job at predicting these future rates, says there is a 98% chance that the interest rate will stay exactly the same. But pay a special close attention to what happens this Wednesday and let me know if you want me to make a follow-up video on that, but I'd love to know your thoughts about the national debt. Does it even matter, or is it just so big that the number doesn't matter and we'll just pass it off to our future generations? Let me know what I might have missed. As always, I hope you have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to grab your free stocks, links are down below. Go track them automatically with a spreadsheet linked down below in my Patreon. Love you, thank you so much for watching this video. I'd love to see you back here on Monday, Friday, sometimes a Wednesday. See you soon, bye-bye.